Now, to continue our conversation on artificial intelligence, we wanted to invite one of the new asset managers in U.S. equity fund, Axiom Investors, to discuss the theme in more detail and how they're approaching it in the global concentrated growth strategy. Today, we have David Kim, a portfolio manager for several different portfolios, including the global concentrated growth strategy, and Greg Schneider, a director of client partnerships at Axiom. Can both of you please introduce yourselves and give us a high-level overview of who Axiom Investors is?
Yeah, thank you very much, Andrew. Really appreciate you having us on here, and we're very excited about the new partnership that we have with you all, so thank you very much for that. As Andrew mentioned, I'm Greg Schneider. I help lead our client partnership team. I help cover the institutional investors that we have across our platform, which are about 400 plus. And their institutional advisors.
Hi, I'm David Kim, partner at Axiom. I've been with Axiom now for over 20 years and currently serving as a co-manager on our concentrated global growth strategy, as well as the lead manager on our U.S. small cap strategy. As Greg mentioned, very grateful for the relationship with you and the broader Wespath family, and look forward to a long and great partnership together.
As far as Axiom Investors, we are a $29 billion global equity boutique. We are founded and based here in Greenwich, Connecticut. We've been in business now for over 25 years. We are a private partnership, and all of our portfolio managers and our analysts invest alongside our clients. And we really feel that the combination of being a private structure in addition to co-investment help aligns our interests with that of your interests as good as anyone else in the industry. And that has really led to a culture of excellence. It's led to a culture of stability and consistency of performance across all of our strategies. So every strategy that we manage, all seeking the highest quality, most dynamic growth businesses across the globe, have outperformed its respective index net of fees since inception.
Thank you, Greg. As we all know, artificial intelligence has really been a story driving global markets over the last handful of years. We really want to know what Axiom's view on artificial intelligence is and where they see opportunities and potential risks in the markets.
Great, thanks, Andrew. Yeah, at Axiom, we're viewing AI as both an opportunity and a risk. On the opportunity side, we're already seeing tangible economic impacts, productivity gains, margin expansion, entirely new businesses and revenue models that are being created. But at the same time, from a risk perspective, how AI is being developed, the diverse use cases, both positive and potentially negative, potential competitive disintermediation, and the capital intensive needs to build the AI ecosystem for compute power and data center infrastructure are all critical issues to evaluate. From an investment perspective at Axiom, we are carefully monitoring 4 segments of the AI landscape. And if you look at the presentation on slide 5, we have them laid out for you. First, on models, the AI model scaling and performance is really important to monitor. Every successive generation of AI models has delivered meaningful performance gains, and with several major model releases expected later this year, sustained improvement remains foundational to future adoption and monetization. So we're monitoring this trend very carefully. Secondly, availability and abundance of capital. Global AI investments are surging on a wave of both public and private capital. We continue to track fundraising, valuations, and hyperscaler CapEx to gauge the overall AI ecosystem's health. Thirdly, the S-curve adoption for AI is very important. We've really entered the steepest phase of the AI adoption curve. We've heard of 100x year-over-year explosion in token generation, for example, on certain AI platforms, really confirming the significant underlying demand, but it bears continued monitoring for demand durability. And then lastly, AI native business formation, just beyond purely cost savings. We really want to see AI being used as a platform for new business development. The emergence of dozens of AI native companies that are generating more than $100 million in annual recurring revenue. Think Cognition and Coding or Harvey and Legal AI, and a smaller subset of companies that are already generating more than $1 billion a year in annual revenues suggest real progress is being made. But we believe continued innovation is really essential to monitor in terms of gauging the overall health of the AI ecosystem. And so we continue to monitor this as one of our major guideposts.
Thank you, David. I think one of the things that was a theme throughout 2025, and I think may continue to be a theme in 2026, was conversations around a potential AI bubble and stretched valuations of some of these hyperscalers. I'm curious how Axiom avoids these more crowded trades within artificial intelligence where that optimism is already priced in.
Yeah, that's a great question. We avoid crowded trades really through a combination of portfolio construction discipline as well as bottom-up stock selection. From a portfolio perspective, every investment at Axiom is evaluated across a global opportunity set and across market caps, which reduces crowding risk as our focus is on diversified sources of alpha. At the stock level, our focus is on the dynamic gap, which I mentioned and is a critical portion of our investment process. Crowded trades are often emerge when fundamentals have been already well recognized, expectations are high, and valuations are elevated. Our investment process at Axiom can really be described as buy and monitor, not just buy and hold. We're continually re-underwriting our positions when the dynamic gap narrows or valuations become stretched, as can be the case with more concentrated trades. Positions are reduced or exited. I think this discipline is a key risk control feature of our process at Axiom and can help mitigating some of the risks around crowding.
Thanks, David. Just to kind of change subjects here just slightly, I think one of the potential headwinds of artificial intelligence are both governance and sustainability concerns as it relates to these companies and the use of artificial intelligence. How does Axiom factor in both governance and sustainability factors when evaluating AI-related investments?
Yeah, that's a great question. Maybe a brief word just on sustainability more generally. At Axiom, we've had a very long history of investing globally, nearly 30 years, particularly in non-US and emerging market companies, as well as in small cap companies, where there's always been a need and a focus on governance as well as environmental and social issues, which have been critical things to consider. Sustainability considerations have always been really deeply embedded and integrated into our investment process at Axiom, specifically through our Axiom company ratings process that we use to evaluate all investments at the firm from both a risk and a return basis. AI-related investments are assessed using the same framework that's applied across all investments throughout Axiom's portfolio. But more specifically, in the context of AI, there are some nuances. And so, for example, when looking broadly at environmental and sustainability factors, as compute intensity rises, energy and water become binding constraints and important sustainability considerations when we're looking at companies. Similarly, identifying companies that are securing reliable, lower carbon baseload power, improving compute efficiency are other important factors to consider that are unique to AI. On the social side, we have to scrutinize data sourcing for these models, copyright issues related to sourcing new data and how models are processing copyrights, as well as, importantly, labor impacts. And so we favor clear and clean data practices and AI that's used to augment, not just simply replace human capital. So that's very important. And then finally, to your question on governance, We assess board level oversight of AI risks, a company's AI strategy, and regulatory readiness. Having explainable as well as auditable AI architectures and a clear strategy around AI is increasingly becoming very important and part of our bottom-up stock analysis. Very briefly, a good stock example of a company in our portfolio that's seeing an improvement in sustainability characteristics is a company called Fujikura that I recently mentioned. It's a Japanese-based industrial, really making the interconnects that I mentioned for data centers. Recently, they received an upgrade from a third-party source, MSCI, in terms of their ESG rating, following governance improvements, really surrounding improved board independence, as well as adding more subject matter experts related to semiconductors and AI to their board. In addition, from a supply chain perspective, they've made some very concrete steps towards increasing their supply chain audits, where they can now monitor much more carefully their supply chain for toxic emission exposures. And so while there's always room for progress, for sure, these sustainability improvements and the positive direction of change for all company stakeholders is really constructive. And this aligns really well with our broader dynamic growth investment process focused on positive change, and hopefully kind of illustrates how we look at positive change as it relates to bottom-up fundamentals as well as sustainability factors.
Yeah, we do appreciate the ways that you at Axiom consider both governance and sustainability when making investment decisions, and I know it's something that our client base here at Wespath finds very important as well. So thank you for the thoughtful response and the way that you thoughtfully evaluate this theme. I had one last question that I hope can do a good job of summarizing the conversation that we had today. And this one is maybe a little more direct, but how is the concentrated global growth strategy that we're invested in currently positioned to capture AI opportunities?
Yeah, I think the goal of our portfolios when it comes to AI opportunities and looking at the responsibility and selectivity of those investments, again, really relates to our focus on diversified sources of alpha. We're very interested in the opportunities that are out there for AI and how that can impact positively many different companies, but we want to do it in a very risk-looking and careful, measured process. What this means is sector diversification. So not only having exposure to technology, but as I mentioned, industrials, comm services, consumer, and healthcare that have different and varying exposures to AI and the incorporation of AI into their businesses. Global and country diversification is so important. So having an understanding that many of the most compelling AI beneficiaries are located outside of the US. And then market cap diversification, kind of to your question around crowding, allowing us to capture growth at multiple stages of growth development as it relates to AI, not just focusing on the traditional Mag 7 type mega cap companies. And so just to close, I think we strongly believe that our one shared dynamic growth investing framework at Axiom provides a real clear foundation for identifying very interesting and global AI opportunities. The global research platform that we have in place at Axiom and our deep culture of collaboration really enables us to uncover unique insights across regions, sectors, and market caps while building investment conviction. And finally, our focus on positive change, both from a business perspective as well as a sustainability perspective, really supports disciplined risk management and long-term value creation. And so thank you again for the time, and hopefully some of these comments were helpful to how you think about AI investing and our approach at Axiom.
David and Greg, again, thank you both for your thoughtful responses today, and we're excited to see how Axiom's thoughts on artificial intelligence will flow through to our U.S. equity funds. We're excited for the continued partnership, and thank you for everything today.
Likewise, Andrew. Really appreciate the time and opportunity, and look forward to speaking with you again soon.
Yes, thank you so much.